Spouse super contributions are a simple and easy way to get a refund from the taxman. And in this video, I'm going to show you how to do it and know exactly how much you'll get back. Hey, I'm Chris Strano, the founder of SUPERGUY, the place where Australians go to maximise their super and build their own retirement plan. If you're new here, make sure you click that subscribe button and all the links related to this video. You can find the links in the description below this video. If you get value in this video, make sure that you give it a thumbs up. It takes 2 seconds and it lets me know that you like the videos and it motivates me to make more. Remember, this is general advice only and you should consider whether it's appropriate to your personal needs and circumstances before acting on it. Alright, let's get started. In my opinion, spouse super contributions seem to be an underutilised retirement planning strategy. So let's take a quick look at how they work. If your spouse earns less than $40,000 per year, you may be eligible for a spouse superannuation contribution tax offset of up to $540. So firstly, what is a tax offset? Well, a tax offset is better than a tax deduction because a tax offset reduces your tax payable rather than just the amount assessed for tax. For example, if you earned, say, $80,000 for the year, you would pay income tax of around $17,000. A tax offset of $540 would then reduce this amount to $16,460. So it would basically increase the tax refund you receive by $540 or reduce any tax you owe to the tax office by $540. So how do you get the spouse contribution tax offset? Simple. If you make a non-concessional contribution to your spouse's super account, you are eligible to claim a tax offset equal to the lesser of 18% multiplied by $3,000 minus the amount your spouse's income exceeds $37,000 and 18% of the spouse contribution amount, up to a maximum of $540. So let's look at some examples of how this would work. Let's say my wife earned an income of $35,000 working part-time as a teacher, which not so coincidentally is her actual profession. And let's say that I made a non-concessional contribution of $2,000 into her super account. I'm the cool looking dude in case you didn't know. Then I would be eligible for a tax offset equal to the lower of 18% multiplied by $3,000 minus $0 because her income does not exceed $37,000. Therefore, $540. And 18% of the contribution amount of $2,000, which is $360. As $360 in this example is the lower amount, this is what I am able to claim as a tax offset. Let's say instead that my wife earned $37,500 for the year and I contributed $3,000 into her account. Then it would be the lesser of 18% multiplied by $3,000 minus $500 because her income exceeds $37,000 by $500 and 18% of the contribution amount. So this means the lesser of $450 and $540. As $450 is the lower amount in this example, this is what I am able to claim as a tax offset in this instance. As I said, the maximum amount that you can claim is $540, which means in order to claim the maximum amount, your spouse's income needs to be below $37,000 and you need to make a spouse contribution of $3,000. All right, I hope that makes sense. Just a few conditions to check off in relation to the spouse contribution. Your spouse, which includes a de facto partner, must have an income of below $40,000 for you to receive any form of the spouse contribution tax offset. And income includes any fringe benefits, reportable super contributions such as salary sacrifice or personal concessional contributions. You and your spouse need to be Australian residents for tax purposes. You and your spouse cannot be living permanently apart. Your spouse contribution cannot cause your spouse to exceed the non-concessional contribution cap. And your spouse cannot have a total super balance in excess of the transfer balance cap, which is currently $1.7 million. Also, because the spouse contribution must be a non-concessional contribution, which is an after-tax contribution, you cannot claim a tax deduction for the spouse contribution. The spouse contribution can be made from any bank account, even if the account is not in your name. For instance, it can be made from a jointly owned bank account between you and your spouse. To claim the spouse contribution tax offset, you simply need to note on your tax return that you made the spouse contribution, including the amount of spouse contribution that was made, and then the offset amount will be calculated based on your spouse's income and the contribution amount. That's it. So there you have it. Let me know in the comments if you'll be doing a spouse contribution this year. Also, if you learned something new from this video, make sure you subscribe to my channel so that you can easily find it and be notified when I upload the next video. If you want more exclusive superannuation tips, head over to superguy.com.au and sign up to my newsletter for free. If you want to get premium access to my superannuation content, then head over to superguyhub.com.au, where I'll show you exactly how to build your own retirement plan and all of the strategies that Australia's top financial planners are charging thousands for. Thanks for watching. I'll see you on the next one.